10 billion in grants, business loans, equity. How can you get access to this very quickly? I'm going to be showing you that, as well as the impending recession that it looks like we're going to be hitting hard, how to be prepared for it as a business owner, how to stay educated in terms of not only funding, but bootstrapping your business in so you can thrive during these hard times. I'm going to be getting into that, EIDL, PPP updates, as well as giving you some examples on business funding, the employee retention tax credit program, how you can still get funding through that, and what you should be looking at through the Federal Reserve, what these programs entail, and just more about how to, again, push yourself during this time. It's not time to be comfortable and to do a lot more than perhaps you have been, or you've been in a spot where you feel like this is enough. I don't have to push myself anymore. That is holding you back. And I'm going to be getting into the reasons why that is. And if you're watching me right now on the live, please give me a hashtag live in the comments or a hashtag replay if you're here during that time interval. I do appreciate your guys' energy and your time. I know how precious that is. And again, I'm very grateful and thankful to have you all. And if I've communicated with you, you know the type of person I am. And I know how you are and how I can help your business move forward in various different ways, not only with business funding, but how can you transform your business digitally? Perhaps you're in the brick and mortar space and you've been set on, this is the way I advertise, this is the way I market my business, this is the way I get contracts, this is how I get customers. But you're in a position now where times are going to get hard. The market recession, you're looking at stocks being down, coins, just look at everything. And you're asking yourself, what do I need to do to keep my business stable, keep it even afloat if you're just struggling, and then to increase your average monthly revenue and also your profits when you think about all of that. So I have some notes here that I'm going to be going through. I wrote them down here, as you can see. And I have everything in there, but I want to make sure, again, like I've said before, I don't want to miss a single detail and then come back and then say, wait, I missed this. So I'm going to use this as an outline as we move forward. And I'll be getting into the share screen shortly. I'm going to try to get you guys out of here in less than 30 minutes, not like in a bad way, like, hey, get going. You have other things to go and do. Go take care of your customers, because I know how important that really is. And I do that every day. I get people who will ask, how do you even spend the time doing this and you have other businesses? Well, it's called prioritizing and just understanding what needs to get done throughout the day. And there's more to that. So what I want to get into before I get into the 10 billion grants, business loans, and the equity side of this equation, and I'll get into the share screen on that, is just the recession is what I'm wanting to start off on. When the markets are up, when everything is going well for you in your industry, because it can vary by different industries, that you get more comfortable in the position you're in. And tell me if I'm wrong. You're in a spot right now and you're starting to, maybe you're not panicking, but you're starting to weigh some options. You're looking out into the market if it's for business funding, or you're trying to start that new opportunity. If you're that person who's looking at a new opportunity saying, oh, wow, I need to get a second source of income, or I need to figure out how to make money online. And if I'm trying what I'm doing right now, is it working for me? So I'm going to start right there, because I do have a lot of people who know me for other business models, and then we'll get into the funding side of the equation. So right now is not the time to say, I'm going to do less. It's the time for you to say, I'm going to do more. And that can mean, hey, I'm going to work on myself personally. I'm going to increase my health, my spirituality, my mentality, my emotional side, my physical part of that lifestyle. Why is that very important? Because if you enter the business world And you can attest to this if you're a business owner right now, brick and mortar, construction, manufacturing, logistics, restaurants, retail. I've worked with it all, digital, e-commerce. Let me know in the comment section, how important is it for you to build your personal side as much as it is to build your business? And I'm a testament to that. I built that over an extended time, and I'm not a guru. I'm not going to spend time right now talking about how you should personally do that and this and this. I won't do that. I'm not going to be motivational in that sense. But I remember a time where I struggled severely. I was working my 9 to 5 position in a logistics company in a role where I was handling budgets, not extreme because I had a person in front of me who didn't want to retire. And so I wasn't able to take over his position like I thought I would be in a little bit of months. So I was there for years in that company, working my butt off, physically as well as mentally. I had to handle boxes. I was working as a contracting company through HP and helping them out, and as well as a few other ones. So I was working on picking up things and moving them around, shelving them, putting in their spots. I had the electric forklift. I'm forklift certified. And then I would sit down and do a lot of data on the computer, Excel spreadsheets and more when that was given. Now, there was a time where the physical demand was a lot less, like very less, like 5-10%. It was slow. So I would work on a lot of the stuff on the computer. But as it picked up, it became a lot harder. And physique-wise, I'm not cut out to do that. But I pushed through it because I wanted to spend more time and develop into a role that I wanted. It didn't end up happening. Company went down under. They ended up relieving over 30 people. And then during that time, I started to think about ways that I can start generating more income. How can I help myself during this, possibly not the economic time because this was pre-COVID, but I wanted to do more. I wasn't just comfortable sitting in a position thinking, well, this is going to take me everywhere. A normal 9 to 5 job is going to get me where I want to be. It's going to allow me to live the freedom, give me the freedom that I want. And that can mean differently to different people. Like freedom for me, I get to spend more time with my family, like 3 more times out of the week. And then I go and visit a friend maybe out of state that I haven't seen in like 5-6 years. I normally wouldn't do that, but just throwing out a few examples where I've done it in the past. But it gives you more time for yourself. Sure, the income is great, but that's only enough. After that, only so much can you get with money. Everything else, you have to think about your well-being and what that money allows you to do. And it frees up more of your time to do things you want. So when you're thinking about building a business, we rarely think about how do we work on ourselves right here? What is personal development? How can I learn the skills necessary for me to develop into a better human being? I never thought about these things. I really honestly never did. I got into this whole digital marketing with the digital marketing agency, affiliate marketing. If those of you who are in here watching me for that, I highly encourage you guys right now, as well as brick and mortar, you're looking for business funding, strap in because we're going to hit a hard time. It's what it's looking like. Think about it like as a meteor, like your life depends on it and you hear about it, you see it in the news. It's unbelievable to you. You kind of just pushed it off, but then you see it again and you hear socially from other people. And then next thing you know, that meteor, that comet's coming to the ground and it's hitting Earth. 1, 2, 3, boom, gone. So you have to treat this like it's the end of days. You have to treat this like if you didn't have another day to live, what would you do today to make the most of it? We're not given another day. Don't live for tomorrow. Live for the now. Look into the past that can help you in the present and in the future. But if it's not something that you want to take away from, and there's usually bad and good you want to. So look into the past that can help you right now in your personal side as well as on your business. So that's what I want to say to that. And then on the funding side of the equation for each and every one of you, if you are an affiliate, if you are in digital marketing agency, e-commerce, whatever business model that is in, think about what can help grow and expand that business. It may be funding. It may be you working on yourself personally. Look, I bought the book just recently. I think it was called The Power of One More. I have to take another look at that. But from Ed Milet, I'm not sure if you guys are familiar with him and his work. Looks like a great guy. Speaks well. He's an introvert like myself. I can relate to him. He played sports coming up. I played soccer. He was more in baseball. But he was also on the finance side and then in another spot. So in a way, I kind of can relate. I'm not saying 110%, but he has that charisma that comes across when he's being interviewed or interviewing others, and the way he carries himself. And so if you can notice a man like himself, and you can kind of model, assimilate, and kind of draw from and add to yourself, that'll go a long ways. Hi, Arian. How are you doing? Welcome in. It's good to see you. And so if you can take a bit from one person, let's say there's a Jim Rohn, there's the Ed Milet's more of in this modern era, and not generation, like baby boomers and so forth, but take away little pieces from each of these people. Get on an audio, listen to what they have to say, and then act on it. Not everything is going to be truthful. I know that. So you have to pick and choose what you hear. Not everybody is there for your best interest. So you have to follow the right people. And so that's how I started to slowly develop into that individual and then push that into the business side. And so every day it is a challenge, but it's a challenge that I wake up for and I say, I'm going to do more, especially again, now in these economic times. Hi, Michael. How are you doing? So I wasn't saying hi to myself, by the way. Like there's a mirror. There's another Michael here in the chat. But on the funding side, how do you prepare? How do you strap in? And then I swear I'll get into the 10 billion in grants and I'll show you some of the examples, and then I'll show you how to find these. And then we'll transition into a few more points and I'll close up here. But for funding, everybody out there is looking for a business loan. And I'm going to start by saying the interest rates, and then I'll get into what you should be getting. So everybody wants an interest rate at about 3.9, at least less than 3.75% for profits. You see that with the EIDL loan. So everybody thinks they can get less than that with the bank loan. And that's not all the case, because you're seeing about 4% prime rates with the banks. And if you qualify for traditional physical or online banking, mostly physical, that's the way to go. Online, you can look at rates between like 6.9 to about 27.99% or so. So it may be a little bit higher, but the efficiency of it is you get it much faster. And there are some more benefits to it. Also, how you can use those funds. You're not restricted to certain uses. Sure, you don't want to have liens. You don't want to have all these other purposes on top of that. And so what you have to look at is, if I can't get anything close to 3.75%, what is the next best thing? If I can't get 4%, or if I can get 4%, what does that look like? 4% prime rates, you're looking at account receivable financing. So 4% plus 2% at around 6%. If you have unpaid invoices, you can go through an invoice factoring company, or we can take those unpaid invoices and directly deal with the consumer, which is your client or your customer. So you have the customer that pays you unpaid invoices on terms. You don't get the money right away. You get them in disbursements. And then you deal with the factoring company directly, and then the client or your customer deals with that factoring company who's getting paid. See how that works? And it's a little bit more, but they're not checking your credit because it's credit based on your customer. They want to know that they're paying their bills on time. They want to make sure that they're legitimate. So it could be less of a credit base, like usually no credit checks on a lot of cases. Time in business, they can start off with startup funding. So if you have unpaid invoices and enough of it, we can take that and then get you about 80%, if not a little bit more, up to 90% nowadays, 90 to 95% of those unfactored invoices. And so that's one part, and that's 4% plus 2%. Now you're thinking to yourself, well, I'm cash based in my company. Maybe I'm a construction company or a different part, and I don't have aging receivables, accounts payables. I can't show this. I don't have a business debt schedule, which all of us should have, but I can't supply that. Is it enough? Yeah, we can still revise you depending on the service. It may be an SBA where the EIDL loan, or not the EIDL loans, the SBA 7A loans, they're looking at accounts receivable as your primary asset, and then they look at other things that you may have if it's efficient enough. And then there's a direct accounts receivable option for 4% plus 2%. So that's a low amount. And if you have that to give up, right now is actually the main focus you should have. I know there are lines. I'll get into that in a moment. I'll get into lines of credits and so forth. But if you have accounts receivables and you want to keep your interest low, as well as you have more control over what you give up, as opposed to this equity and appraisal, we have to take out an injected amount and then say, hey, this is what is feasible. This is how much we can get you. And now you have to worry about a little bit of those things. And then you don't want to give up equipment, the inventory, and so forth. So accounts receivables is a great way to bootstrap right now going into this impending recession that we look like we're facing. And if you don't have that, I'll share a little bit more. And then I'll get it into startups and so forth. But just understand that 4% plus 2%, and then you have about 4% plus 2 to 8% when we're talking about other forms of assets-based funding. And 4% plus 2 to 8%, yes, you're getting underneath 10%, a little bit overboard to the early, a little bit later teens, so about up to 15% in a lot. And so after 15%, if you don't have any assets to give up, you don't have any of this real estate, high commercial, residential, you don't have nothing that you can put in front of you, or you don't want to use that, and you're okay with going higher in interest, just know you're going to be getting somewhere between 19 to 50%, if not more, up to 200%. And I know how that sounds, and that is realistic because of your risk. Lower revenue, if it's based off of cash flow, puts you in a higher risk. Lower credit, lower time in business. This is the reason why you're getting 50 to 70% interest in a lot of these cases, because you are a lower risk profile. But if you're okay with it and you go, well, I can get approved for accounts with, I'll have 500,000 this month. I'll have 500 extra thousand next month, equivalent to $1 million that I'm holding. I want to give it up, but actually I don't. I want to see what this other collateralized option can do for me. Or if I don't want to have to go that route, what can I do without collateral? So once you get into the uncollateralized options, like the cash advances, you have the unsecured term loans, unsecured lines of credits, and so forth, then that's where you start getting into these 19 to 50% or so interest, because you're not putting in collateral. Now, if you're a startup, before I do that, lines of credit, that is what you should be looking at. Everybody should have a line of credit. And that sounds easier said than done, because if you don't have the revenue of at least 10,000 per month, and now that's gone up, that's going up even for online banks, where it's 10,000 at a minimum, but they want to see more. The stronger the revenue, the better, but it's more of a credit-based program. So a 600 and above, even in some cases, a 550 and above can get you in, depending on the states and depending on those consumer credit reports, your debt to income ratio, your credit utilization, your inquiries, if any, how many do you have? Have you disputed anything? Are you taking on child support? And there are a lot of factors, because one of those being child support, if that's on your credit report, that can really cancel you from not only a credit line, but other forms of financing. And if we can get that out of the way, we can dispute any of these late payments and take care of them with the Metro 2 compliance systems. That's something we can do. And if you're interested in that, getting help repairing your credit, check out my #1 recommended program. It'll be down below in the description for you to look at. I don't think it's there at this moment, but I'll update it after this video is done. And then anything else for fixing and improving credit, make sure to check that out. Business credit building is going to be even bigger. So lines of credits, accounts receivables, I would label it as first, because you can get an AR line of credit, accounts receivable line of credit. You can even get the cap line program through the SBA, going through your bank. That's where they would send you to if you can get approved through there. And then you would have the credit line hybrids, I'll get into in a second, but the business lines of credits that are revolving, you can apply to and withdraw those funds, use them however you need to. It'll help cash flow gaps. It'll help you when you have an unexpected business expense that arises, because we know as business owners how much overhead we take on. And now we're so stuck in that we can't even clear it. And then we have debt on top of all of this. And now we got to meet payroll purposes. We have to hire on more employees, take on more equipment, get a new building, expand growth. That takes on a lot, and it takes a whole different evolution of its own. So right now, the credit lines are the best to go after if you can and get approved for them. And if not, there are other options. There's the credit line hybrid right now where you can get 0% interest for 6 to 18 months, but you have to have strong enough of a credit profile. And that's a 680 at a minimum and above. But the minimum nowadays doesn't get you in. A score is only a score. But when we look into the credit reports, that's a whole different story and everything else. So that's what you want to strap in on. Now, let me jump into what a lot of you have been anticipating. Hi, Kevin. How are you doing? Yes. So now let me get into the share screen here and show you guys examples of how to locate these 10 billion in grants, small business loans, and also in equity. 1 second. Okay. So first and foremost, I'm going to show you guys the grant opportunities because I have this tabbed open and I wanted to go through this very quickly before I show you that. So this is a document that I have left below. It should be in the description, but these are the grant opportunities for today. You see 2022 on your screen. And that number will change over time once we get into 2023. This does get updated over time. These aren't a definite limit of grants, but there are more that will be updated over the time. Please add this to the dock of your favorites via web browser or save this link that I provided for you right there. You can see in Bitly for future reference. And you're going to see all of them here. I'm going to update a few of them here coming up, especially with the 10 billion and how to do a search on that. But you can see a load of them, how you can get more funding help at the bottom there and so forth. So I won't spend a lot of time on that. Now let me open up this other tab that I have. 1 second. Now, this is through the Department of Treasury. I don't want you guys to get confused and think this is through the SBA, that kind of government-related funding. This is through the, again, Department of the Treasury. And you can see here, this is the State Small Business Credit Initiative Program, abbreviated for SSBCI. And I've been speaking about this all week. So if you have not been plugging into my content, let me move this. If you guys are not plugging into my content and you're asking so many questions, there's a reason why that's the case. And it's still a reason why you're in the same problem you're in. Well, Michael, I don't have time to watch a 30-minute video. You think I actually have it? No. Well, you know what you can do is bookmark it, come back to it, watch the rest of it in increments. Nobody's pushing you. Nobody's rushing you. And I get it. We're all time sensitive and energy sensitive. So we want to make sure we get this done in and out as soon as possible. But it also takes your education. Right now is the most important time outside of just getting business funding is to work on your education. Spend more time in your own business educating yourself on the products, your consumers, your demographics, psychographics, understanding customer behavior, and understanding how to get new consumers. Understand how to build yourself what's called the value ladder, where you start from the bottom, you have a front-end product, and then you have a middle-end product, and then a back-end higher value, possibly higher costs. Think about those things. Look at a dentist. What do you do when you go into a dentist? What do they offer you? Okay, free checkups. You go in, not necessarily free, but you go in there, and then maybe they give you a brochure. Yeah, I'm coming in and getting my teeth checked, clean, and the next time you know, they're telling you need a crown, you need to get a root canal, which is the case with me. I need to go in there, not a root canal. Root canal wouldn't help, but it's up on the top here. I've been putting it off for some time, and I am a little nervous about it because for that case, I've been putting it off a bit. But I will need to get it replaced. I forgot the name of it. I'd have to look it up again. But it won't be like a root canal or a crown. It'll be something different. It's like an implant. Kind of, you still see the tooth there, but I know I was kind of like skeptical, one, but then two, because all this time has kind of passed. I went to California, came back, and I can feel it from time to time. It's not like it's hurting. Sometimes the pain level is like at a 3 and it comes back time and time again, but I do need to make that appointment to go in. So anyways, just understand right now is the time for you to stay more educated. And then I just don't say that. This is the truth, statistically speaking, as well as what I see when people come and apply for business funding. They're not ready. They don't have their document, which I'll get into in a moment. They don't have their docs. They don't have this and that. And then I have to reach out, and then it becomes a week. And then what are you doing is the question. Like, why are you dabbling? Don't dabble. If you're going to start something, start it and you end it. And you do it with conviction. You get in there and you say, hey, this is serious. I'm not going to just start something and just leave it. Because that's what a lot of business owners end up doing. And the reason of that is right now, it's because of fear. Fear of this, oh, well, people are telling me to save money. People are telling me not to spend. The demand is high, but there's not enough supply. I can't get the equipment. And I mean, if I spend too much and then I won't have enough to pay my bills personally, and then I get all of that. That is a concern for a lot of us right now. We don't always have the income. But at the same time, if you understand the value of your business, understand that you're in a position right now where you should understand the outcome, if you're starting a new business, what is that outcome? How do I get to that? You reverse engineer from the end result to the very front. And that has everything, your conversion mechanism. What is it that over here, how you're generating that money, that revenue that's coming in? How do you keep it flowing and steady? What do you need to do here at the bottom? Maybe it's bringing in new fresh leads or recurring leads that continue to go. That's the way. And you keep pushing. And that may involve you spending the money to make money. Can anybody give me that in the comments? You have to spend money to make money. And I know a lot of us don't have what we need to spend on something in some cases, or we're just not willing to let go with it because we fear if we move on with this, well, I'm going to be in a situation in debt where I'm going to be figuring it out from. No, the problem is you didn't have a plan to begin with. The problem is you're just shooting for the fences and you're just trying to see, well, what would happen if by that point it could be too late. So over here, let me get back into the screen. So on March 11, 2021, President Biden signed the American Rescue Plan Act, which revolutionized and funded the state small business credit initiative, the SSBCI again for short. And what it entails, it's $10 billion to states, the District of Columbia, territories, and tribal governments to empower small business access to capital to invest in job creating opportunities as the country emerges from this pandemic. The funds will also support recent recipient jurisdictions, promoting American entrepreneurship and democratizing access to startup capital across the country, including in underserved communities, as it always is, especially now more than ever, because the bills of the Restaurant Revitalization Fund, as a few other ones, weren't passed. So this is more of an emphasis with underserved communities and those of you who have been impacted by COVID. But again, it isn't an SBA EIDL loan and so forth. So let me get into those states that are currently eligible, because as time goes, more will open up. So you have Hawaii, Kansas, Maryland, Michigan, West Virginia. And again, this is not only for grants, this is for equity, and this is for any type of business loans that they are willing to offer. And like anything else, you have to be prepared for what you can get. Now, let me move over to another screen here. And I'm going to show you one from Michigan. Actually, I'm going to go through, let me do this. Yeah, I'll do it on this screen. So you can see there's more there. And go to Google. So what you want to do once you're on Google, it could pop up on a different search engine like DuckDuckGo and a few other ones. But what you want to go through is Google. Google is the one that will most likely show it to you. That's where it appears, instead of like Bing and a few others. So SSBCI and then your state. So you can see even before I typed in the rest, okay, can get a better understanding of that there. California, right? That's what you would want to do, SSBCI California, and you can abbreviate it, that's fine. SSBCI Michigan, because it's one on our list of the 5. And then what happens is I'll find it. So I'm in Washington, so I could do SSBCI in Washington, and I have a tab open for that. So I'll show you how some of these look and how to access them. So Michigan.gov, debt funding programs, either one, but this is actually the one you want to get into, especially with the press releases. Whitmer announces Michigan awarded millions to support small businesses. May 19th, 2022. And you can read a little bit more about the description, how it came to that conclusion to award and give people the money. The SSBCI 2.0, which is, yes, from the time that it was released to now. Designated to do what? And I'll give you that information. What programs does Michigan's include? And let me come up here so you can get to this point. So Michigan has been approved for up to $236 million plus awarded, which are intended to increase access to capital and promote entrepreneurship. The program requires partnership with private sectors, lenders, equity investors, and technical assistance providers. So that's the case for all of these, but some of them will work more with them than others, and some of them you might not even see it because these are organizations you're getting access to through the Treasury Department. So now let me move this down here. Sorry, I can't see the comments. I have this HP lighting on. Let me read the comments. Hi, Gerardo. How are you doing? Yeah, I've been seeing your comments, man. Appreciate you and emails and so forth. You're one of the real ones for sure. There is no cost for me to help you get this set up. I don't have setup fees. I don't do application fees. I don't do any of that. I don't like mentorship programs in charging you. No consulting costs. No coaching. No, I don't do that, at least at this moment. And I don't think I will do that in a lot of cases moving forward. The best way, if you guys need help getting a hold of me, though, is to do this. I don't want to bring it up yet on the screen, so I'll just tell you guys, and I may bring it up towards the end. I know I said 30 minutes, so thank you guys for being here. We're going to kick this forward. There's a lot more to get through. This is well worth your time, trust me. But I have a questionnaire form in the description. You fill it out. It should take you no longer than 30 seconds, literally, if you have everything in there. And you'll get a free 6-step pre-approval lending checklist to get you approved for funding much faster. And if you're waiting for that, for me to respond back, tomorrow's Friday, Saturday. Like if you heard me say this, those are my catch-up days. And if I didn't say this earlier, I wanted to say it in the very beginning of the video because some of you are watching me for the first time or just discovering me. And I should have mentioned this, but I do come out with content on all small business loans, building business credit repair, improving your credit, building business credit, of course, and a lot more, taking advantage of different opportunities financially, growing into another business, as a lot of you here are following me for those reasons. So I just wanted to get that out of the way. But in the description, fill out that questionnaire. It lands in my email. I will evaluate, analyze, and give you a proper response back on your best funding option and options, very thoroughly broken down. Intro to conclusion, body, qualifications, how it works, bonus tips, bonus material. And in the conclusion, I'll actually tell you what I would recommend you do for your specific situation. I never lowball you guys. I give you guys the reality. And if you're not willing to face that, then you have to take a second look in the mirror and ask yourself, okay, I have to lower my standards. It's okay. And then you move up from there. So we all have to start somewhere. So now let me get back into the screen. And then you can see that. Go down here. Read more about it. And in some cases, they may not have a contact form. And then in some cases, they may. So you can contact right there. There's a phone number to get a hold of. And then at times, you'll have to look in the actual navigation because you'll see government grant. You'll see grants, loans. And then under those, you can look through the drop down and they'll have specific names of those programs that you can access. So now let me show you guys another example over here. Let me see if I can find this one. Here's another one for the state of Florida. Like that was not one mentioned, but you can get in on it early and you can find out. They may not be releasing that money. Here's the thing. They may not be releasing it, but they'll have it already on their website. They'll already tell you, hey, this is the organization. Go ahead and get started. Click this link. This is what you do. And if some cases they don't have it, that means you have to refer back to it or contact wherever it's giving you that information. So program updates on February 10th, 2022. Here you can see there's more information on the SSBCI. I'm going to quickly go through that. Just an overview of kind of what we already spoke about. Jurisdiction, main capital allocation. You can see 300 million there. It's a lot more than the last one. And then the program type, they'll have collateral support, loan guarantee, loan participation, capital access, equity capital. And it may not be like they all have grants, like I'm saying. You may have to investigate a little bit deeper, but those are some of the options on the left side here. Don't miss this because this is they're actually going to show you those programs in a drop down. You can actually click through them and find out more. And they'll actually also show you right here in the screen in a lot of cases. They'll give you the names. So now let me open up another one to show you another example, and then we'll conclude from there. Yeah, spend money to make money. I appreciate you, Gerardo. Thank you for putting that out there. And I appreciate each and every one of you. I know I say this so much, and like I get in a cocoon. I don't know if you guys are the same way, but I'm an introvert with ambivert, extroverted qualities. When I need to be that person, I will step into those shoes, and I roar when I do. Like you guys should really listen to what I have to say, and it's not saying I'm not saying that like in a conceited or cocky way. I'm saying that in a confidence manner, and a lot of people will attest to that. That when it's time for me to step up and speak to you guys and bring out these extroverted qualities that really pay close attention to what I have to say. Because I don't think anybody else delivers the way that I deliver the content for you. And I really go through it. And I don't spend all this time on, hey, well, I'm going to spend 3 hours of a video going live on grants. I don't want to do that because I want to cover topic to topic. And it's not always the best way to go. So you need money to spend money. So yes, love it, Michael. Thank you for saying that. You search, just applied, answers. Awesome. So you did this while we're going live? Let me know. So you said just apply, so I take that as a yes. But let's keep moving here. This one, there's another program here. And this is through the SBA organization through this program. And you can see here how, for instance, SBCI can be used for, and they'll tell you what you can use that capital for. Inventory, working capital, equipment, startup business costs. So a lot of these will give you more than one option. Some of them may give you less. So loan amounts from 50,000 to 200,000 with total projects stretching from 100,000 to 400,000 and above. The PSBCI loan is a second lien instrument. This benefits you because it gives you your primary lender, the ability to approve loans that might otherwise be declined. So that's an advantage with that lien. Since the structure and eligibility and particular loan can be more creative, it is worth a quick discussion to determine your company's eligibility. And this one here is in Pennsylvania, so just in case you guys are wondering. And there's a contact us form there. So that's what I would do if you're in the state of Pennsylvania. Get in contact with them right away. Do not waste any time. And at the same time, let me move this over. I'll get into Washington, and then I'll get going. But you could also search California. Again, search your state. And you can also say the whole state small business credit initiative instead of the abbreviation, and then with your state. No and or plus, just your state. Or not even your county. You could put your county, but I would put your state so you're not limiting yourself. And so what I have to say is if you're going to fill one of these out and you have the opportunity to get financing elsewhere, let's just say you're an established business and you're doing about $50,000 a month. You have, it doesn't matter the credit, but I'm just going to say you have a 600 credit, 2+ years in business, and all of this over here on the back end. Well, kind of like a grant, kind of like the EIDL loans towards the end of its moonlight, is it can be hard to get in some cases. Now, you have to demonstrate proper use for one. Multiple uses really helps. Or if you have a huge use for one specific issue and they really see that and they go, well, you're really struggling. You do need this for paying off debt. You need this for payroll. And you're amounting this much. And your story just, man, all this stuff that they're hearing from you, your application, it makes sense to move forward with you, then they will, without a shadow of a doubt. But like anything else, these are competition-based. And you shouldn't just be sitting on it. If this is your last resort, that's your last resort. But if you're that business owner who I've probably already spoken to, whether that's an email or a multi-channel, phone call, direct messenger, I probably sent you a text today. I know I sent quite a few people today, reminding them a few things. So make sure you look at the text message if you've gotten one from me. And it's not pressure or anything like that. But just don't sit on that. Right now, like I said, with this impending recession, lines of credits, any lines of credits right now, credit cards are the way to go. If you can qualify for that, go through the credit card route. I know that's not the most attractive. You don't get the limits, the interest, and all this benefits to this equation involving. You may not get all of that, but you have to think about what can you do right now. And another alternative to this, and I'll get into the last one, is you have options out there like cash out refinances. Do you have high value or enough commercial property, these rental investments that we can look at and we can inject money out of that to then help you start up your business, help you push yourself forward? Do you have land? Do you have assets? What can you give up to get your business started and going? Do you want to go that route? Do you want to use a home equity line of credit, a HELOC loan or a HELOC line of credit as what they're called, a HELOC credit line, and you can inject money out, the equity, the difference in the appraisal and what your mortgage currently is at, what the actual cost of your home is. You have to own it to be able to be eligible for it. Ownership of your home for sure. And then you're looking at your mortgage payments, how much you have left and so forth. And then you're looking at the difference between that and the actual cost right now in the market of your house. And so we could take the difference and say, hey, we're going to give John here 150,000. So what does that 150,000 do? They don't always limit you to what you can use those funds for. You can use it, yes, for home improvements, debt consolidating, or whatever that is, but refinance and all this stuff. But you have to think about, can I use this for business? If so, how can I use this effectively? Once I establish that, how can I use this HELOC credit line to then, boom, use it? But you have to be careful about taking money out of your home. I don't advise you do that. Even if it is a last resort. I have a lot of people talking to me and they want to get a HELOC, but it's not the most attractive like you think. You only take out and use what you can. It's more crucial than an actual like business credit line that you can get through private lenders. Like, you have to be very cautious, one, and then you have to be 100%, not 95, not 99%. You have to be 100% certain that not only am I going to get approved for this, but then two, when I do take out funds, I got to use this. Like, I have to use it and pay it back as soon as possible. And if it's not something you're able and capable of doing, then, I mean, you have a cash out refinance. You have property to give up. We can look at injecting out, and then we can move in that direction. So now let me move back into this here. One more SSBCI search. You can't see it on my screen, but I'll bring it up in just a second. What you're seeing on the screen here is from Washington, providing small businesses with access to capital. So this is my state, guys. I do live in Washington. No, I will not give you my address. Maybe I'll give you my P.O. Box business virtual address and so forth. And you can go there and be like, so this is where he lives. Oh, wait, he gave me his business address. Craft Fund, W Fund, Collateral Support Program. Need assistance? Our business experts are standing by. So if you can click there, similar to what we saw earlier, write us. Look, name, email address, business name, address, city, state, zip, phone, website, message. They're not even asking for your social security number, at least at that point. Administration, reception desk, you see all that. Sector leads, business development, rural, small business and marketing solutions, and quite a bit. Now, let me come back here and show you how to access these ones individually, because you can't do that with Washington. So Craft Fund, W Fund, a collateral support program, as we've seen in some of the other ones. And here, let me bring this up on the screen because you can't see that. So this is the page that I'm looking at. Now you are too. The W Fund makes earliest stage investments to accelerate the success of Washington's most promising technology-based startup company. So if technology is the side of your equation, there you go. And originating, from research institutions and students across the state. So you can go in there and apply, and you can do so with the other one. So this will give you access. Let's show how that looks. Applying to W Fund, and then you're going to see the description there. It's no longer accepting applicants at this moment. And like I said, it's not one of the states that is open to at this moment. So as time develops, then you could be looking at getting into that. Craft Fund right there. Loans, impacts, you can see that. Borrow, loans for businesses and homeowners. If you're in business, if you're a homeowner, look, there's an advantage there. Home energy loans, clean water loans, ADU loans, manufactured home replacement loans. Loans for businesses, business loans up to $250K, over $250K. Food and beverage loans, look at this. Whoa. Oh, wait, you guys can't see that. You guys are like, what is he talking about? What's this guy on? Hold on 1 second. I apologize. Okay, this is Craft Fund, loans for businesses and homeowners. You can see this here. Business loans up to $250K, over $250K. Food and beverage, working capital, equipment, and real estate financing. Nonprofit. Hey, there you go. Clean technology, Indian country loans. Get started today. Testimonials. You can see a bit of that. And this is one that's been around, and this is an amazing program. If you get access to this, take full advantage of Craft 3. It's just an amazing one to get through. And as a nonprofit, mission-driven lender, we're different. We can work with borrowers who have imperfect credit, make loans with limited collateral, finance entrepreneurs and homeowners with limited income or equity. Limited. Think about that. It's not an actual like amount. So home energy loans, clean water, ADU, manufactured home replacement. And you can click through some of these and learn a little bit more. And you can go over there and apply now for contractors. And then we move this back here. You can't see this tab right now, but here, it always opens up a new one when you click that one. So let me come back. So if we went over here and we typed in, or we clicked on loans, you can also click on impact, do food and beverage. Financing for food and beverage processors. Craft 3 knows that local food and beverage processors are vitally important to a thriving regional economy. And then there's more information there you can read. Working capital, equipment, real estate, how they can provide you to those uses. And then on the left side here, excuse me. But underneath there, you can get, on the left, you can get started. And then as you go through this, you'll see the rates and the terms. Like this one here, loan size up to 250K, 250,000 to 10 million rates. They start from 8% to 10.99%. Here, let me move this. Okay. Hopefully you guys can see that. So when you're thinking about getting an interest rate at 8%, wow. That is amazing. Like, yes, it's not 4%. It's not bank rate loans, not HELOC credit line loans or cash out refinancing. You're not in this real estate as a real estate investor and you're getting lower than 10%, sometimes just 10% a little bit of above. But from 8% to 10.99% up to 250K. And then if you're going over that, that's where you then get a minimum of 7% to the same maximum of 10.99%. And then fees, you can see that, the origination, the closing costs, terms of 3 to 7 years, repayment terms, normal principal and interest payments each month. Interest-only payments are possible for the first 3 months. There you go. Get started now. Introduce your business. This is the process. You'll see this commonly with just about every other program. I've seen this and I've gone through. Introduce your business. You talk with the lending team. You apply. You go through an application review. Funding decision is then being given, disperse, and then you repay. That's it. It's very substandard. It's normally what you would see with just about any other private lending, but they may require a little bit more information. They want to know more about you, a business plan, and it may go a little bit more extensive because this can be grants, loans, equity you're putting yourself into. So you have to understand that. And then on the top here, you can see borrow and just learn more information. If we backspace here, let's go through impacts, tenant impacts, measuring results. You can see all that there. Won't spend a lot of time. Oh, you guys can't see that, but here. Borrow, you guys can go there, backspace. I need help with investing, financing, opportunity zone. So it's always worth your time to go through all this. Now, let me move this out of the way and go into the next part. Just give me like 5 seconds to transition into my next points. So EIDL updates, nothing really moving, nothing you should be worried or concerned about. The future outlook of it, right now it's bleak. Like there's nothing being pumped or injected into it to say that there's going to be any transfer of funds from one. Well, the federal is one part, but then you have the COVID relief for different programs that weren't passed. So you really won't expect anything out of that being injected into this at the moment, at least. So moving forward, a lot of people are stuck in the queue. And unfortunately, the disbursement of funds, a lot of you guys will not get it just because the funds are exhausted. And a lot of those of you who were already in the queue did get processed, and some of you will not. Well, actually, a lot of you. And so a lot of people have missed out on this. Millions upon millions of people have been helped, but the majority is just a small amount statistically. That, when I mean by small amount, like 17 and 18% or so who did get passed through, and then there's like a larger portion that just did not. So the majority of the population were not able to receive EIDL funds. Even the initial amount, the statistics are much higher. But don't be strung up because you didn't get anything. You didn't get an increase. You didn't get a response back for your reconsideration. I deal with that every day still. And just keep your head up. Keep pushing yourself and look for alternative means, which I'll get into. Updates. EIDL, I spoke about this in a video recently. The administrator, Guzman, I went over the points that she was able to positively affect during her time helping with the SBA EIDL. and not focused on the negatives, just so you guys know. I know there's a lot of negatives there, but PPP forgivenesses, now's the time to really start working on that. I won't get into that specifically because, again, I made another video. I'll try to link you guys to down below, but you guys can go through that process. Nothing new coming about the program. People will say, what's the new PPP program? Well, that's, in a sense, is the employee retention credit, but that's a refundable tax credit for payroll. So that's what I recommend you guys do, is go look through the employee retention tax credit program. And I'll leave more information of that down below in the description. That's where you can get up to $26,000 per employee. That's what you guys should be taking advantage of. I have a lot of people right now who already signed up, are already under review. They're already passed under review. Everything just needs to be submitted into the IRS by ourselves, by the payroll specialists. That's who you're going to be dealing with. And once it gets sent through, you can expect about 2 to 4 weeks for a response in a lot of these cases. And your funds get dispersed between 6 to 7 months, if not up to 12 months. I see a lot right now. And I've been saying that for some time. So if you haven't been, again, listening to what I'm talking about, I know you're busy, because I am too. How am I finding the time to go from 12:45 Pacific Standard Time to 1:30 when I should have been doing something else? Because I cleared my schedule, because this is very important for you guys to know. And I care about you. That's a human first. I care about you and your well-being. I care about who you are. What do you have going on? What's going on this weekend? You're hanging out with family. What are you guys doing together? You guys going to watch the movie? I recommend watching. Oh, they like watching that. So it's like I take time to care about each person. You guys are not another file to me where I'm like, yeah, send me the bank statement, send me your year's worth of tax returns, send me your personal tax returns. I need to know this. I don't do that. I don't pressure you. It's all up to what you decide to do. But right now is not the time to say, hey, I'm going to apply and I'm going to wait a week to then submit all my documentation. Don't do that. And I'm going to get into that in just a moment. And sometimes we don't have it all together. So I spoke already about this next point, which is the 6% interest. And that is primarily, I think that was, 4% plus 2%. Yeah, that was for the accounts receivable. So I won't spend much time on that. That's how you can get a low percent, 4% prime rates, usually plus 2%, or in some cases, 2% to 6%. So you can fall underneath that 8% range. And so think about it. It's not all about interests. We're not looking at, can I get less than 10%? If so, what is that option? If you qualify, and if it's the most attractive to you, you want to give up equity, you want to give away high value commercial property, you want to give up you want to give up that rental investment, you want to inject equity, you want to give up that much of inventory, maybe accounts receivables and more. Sure, there's a benefactor if you need it for like 3, 4, 5 years and you don't want to be repaying back $3,000 to $4,000 per month or so, and you can afford to do that. But a lot of us can't. And even if you can, look at these other options where you can get unsecured financing. It may be faster. It'll be faster in a lot of cases. And the rates will be higher. I'll say that. You're probably not looking at anything underneath 15% in a lot of these. When you're looking at private lending, you're looking at higher than 15%, 19% and above. But lines of credits keep your interest lower, 1 to 3% per month. You know, you have it for 12 months, 12 by 2, 24% over the 12 months. If you continue paying it, it can get expensive. So if you have a line of credit, you get approved for 100,000 and you only want to take out 10,000 and use that, pay it off as soon as possible. Don't let it accrue interest per week. So then now it's adding, like you have an extra, you paid 300 and now you got to pay an extra 300 the next month. So 600, or next week, 600, 900. That's how it adds up to be about 1,000 to 2,000 per month, because you're not paying it off. You're not understanding that when you get these funds, use them, implement them, put them back, get more, use them, put them back, get more. And if you need a lot at once, just understand what you're getting yourself into. So document preparation. This is a huge one. And I'm going to try to go through this as quick as possible. Like I said, have your documents together. Now we're living in a digital era. This isn't only for business funding. This goes for any other type of business model you're in, or whatever it is you're doing. If you have customers and you have expectations that they need to meet, how do you feel when they don't submit to you what's needed right then and there? You're like, okay, because you understand their situation. I can be flexible. It's okay, no problem. But if it happens over and over, if there's a situation where like this shouldn't have happened, why are they taking that much time? I've already told them what they needed to get done. and they're not getting it to you. Like, would that kind of like not make you think bad of a person? Because I don't think like that. Everybody has a different situation. We're all going through things, but it makes you feel like, oh, this is going to be dragged on. This is going to be dragging on for about another week. I just reached out to this person. I reached out to people today. They don't even respond back. They tell me, oh, I'll go do this. And then find out today nothing's been submitted to the underwriter or the lender. Now I have to reach out again. Tomorrow I'll be giving people phone calls because I gave them all week. No response, but they're serious. How are you serious if you're not responding back? You're not giving me feedback, or you're not if you don't even give me feedback, show it. Go in there and show it. But don't be like, well, I work 10 hours a day, Michael. What do you do? What do I do? I probably do what you do and a lot more. I'm not saying that I do, but in a lot of cases I do. And so I'm working this, and then I'm also having to understand this, and I'm having to push into another few sectors. And I care about you. I'm not trying to be better than anybody. That's not the point. What I'm saying is that even if you get busy, you have to find the time. If it's serious enough to you, you will do it. It's not until somebody tells you, hey, you only have 2 minutes. If this doesn't get submitted, you will not get funded. This application will close forever, and you will not even be able to see an offer. Would that push you into that? Would that then give you a sense of urgency? Of course it will. Like the recession right now. Don't get comfortable. Right now is the time where you're going to see a lot of people not being comfortable. They're going to start waking up to the realization of costs. My goodness, even more than it has been ever. And they're going to be saying to themselves, I should have just done this a while ago. Why did I put it off? Because I was comfortable, because the stocks were up, because the percentage of what I could get in interest was low, or because of this and that. And see, there's no drive behind that. It's when you get the most comfortable, and when things are going good is when you should question yourself and put yourself into a spot where you're still out of your comfort zone. Don't get comfortable in the no. Get comfortable in the unknown. That's what you need to be comfortable in. I don't care how long you've been doing your business. You've been running it. This is how it works every season. There's always something new in your processes, how you operate, your finances, the sales and the marketing department, how you can put that all together. But without you being the business owner who can oversee them as the integrator, as the visionary, that will never come unfold. So you have to take time to this and make sure you guys align with it. So prepare your documentation. Usually I'll tell you what I need you to supply me with, or you will have to upload it digitally. And that's the other case. A lot of business owners are not submitting all documentation because they're not aware of how the application process digitally works. So we have an understanding PDF. Okay, we need to fill out the application, send it back to Michael, or I have to send it back to this specific entity or identity, and then now I have to, then they're going to ask me for me to submit my bank statements, or I'll ask you, send it to me through this email where it's safe and confidential, safe and secure. And so then I can forward it over to the lender and so forth. But we're in a digital age now, everyone. We're expected to supply voided checks, copy of your driver's license, PDF formatted documentation. I said that the other day on a quick live on TikTok. I do use the TikTok. I know some of you are in here like rolling your eyes. Like, oh, goodness. I know I'm not a TikTok person either. You should see all the profanity sometimes when you're scrolling through different recommendations, and I'm like, I don't even want to see that anymore. Cross that off my feed. I don't spend time just consuming. I'm producing for you guys. So become a producer, not a consumer. That's what you need to start acquiring up here. Produce. Don't consume. Stop your, I need to watch 30 minutes of TikTok, or I need to check my wallet, and I'm gonna, next thing I'm gonna check my glass case. Oh, there's some hair in there. I'm gonna act like I'm doing something, and we're tying ourselves up into activities we shouldn't be. It could be at the end of the day. I get it. We do one video here or there to relax, but when it's time to work, boom, devote yourself. Even when I'm not working, I don't consume myself in that kind of content. That's just, it goes nowhere. It's not educational. I spend a lot of time on educational content these days. Educational and entertaining content. So educational. Edutainment, that's the word. So prepare your documentation beforehand, because in a digital application, you will be asked right then and there, upload for me your 3 months of bank statements, your most recent, The second month, the third month, upload a copy of your driver's license and a voided check. Boom, on to the next part. What do I do? You're pretty much done from there on out. Once that gets submitted, boom, let's go look for an offer from you. If it's multiple offers, if it's one lender, it's done. Very easy to go. Sometimes it won't be digitally. Sometimes it'll be where I ask you, can you please send me at least your 3 months of bank statements? I need 12 months. Or you missed a month, and I'll put it all in a folder for you, and I'll say, hey, these are the tax returns, or I can put it all in one. Tax returns, business debt schedule, AP/AR report, 12 months of bank statements from 2021, at least the most recent 3 or 4, 5 months, however many from 2022. And then I need this there. So then I can send that all to the lender looking very nice and neat. Upload it if I need to upload it somewhere. But it's all very good to go. But what I do is I check. Like I sent people this week. Hey, you're missing your bank statements on this. You're missing a tax return on this. Please speak to your CPA. Go to your accountant. Ask for that information. Is this even feasible? Can this get done? If this can't get done, then, hey, it's not the end of the world. But I set the expectations already that, hey, you have to take time. This is going to take a little bit of patience for you on your end as well as on mine. And if you can get this all done and sent to me as fast as possible, the better. If not, don't worry. But we don't possibly want to stretch it out for too long, especially if you're looking for getting funds soon. And once you start something, you end it. You continue, like ending it as in when you start, you finish. Don't just, I'm not going to continue. I don't want to supply extra time. Not in that sense. So again, I said here, speak with your accountant, get some more financial insight into your business. And that means you understanding your revenue, understanding your numbers. Speak to your accountant. Have them speak to you in the way that you would understand, not in accountant language. And then have them give you information on, hey, I know, Jim, I run a lot of the front end stuff and I pay less attention to what you're doing, but can I get a little bit of information on, what I'm doing average and what can I afford to give up? And you got to just sit down with them and take the time, whether that's in person or virtually, and really go through it. I go through all of this with myself, my accounting software, and whoever I have to deal with, my CPAs, to do taxes and so forth. So spend the time to do that. It makes all the difference. And there's another thing here. If you don't have like business debt schedules, AR, AP, accounts payable, accounts receivables, in your cash-based in a business, then that makes sense why you can't supply that. But in a sense, we can still, if you're applying for an SBA loan and you don't have those two, then we can still review you for it because, again, it's a credit-based program. And they may want to get on a phone call with you to understand more about why you don't have these things. And they may already know because of your industry. And that, when I say that, is like myself, the lenders, the underwriters. Trying to read what I put here. Sometimes I put a word in there that I can't even read myself. This one I was trying to just get it done in less than 5-10 minutes, and I wrote it quite a bit. So I spoke about different forms of financing outside of the EIDL, PPP. You have the employee retention credit. Lines of credits are big. HELOC, cash out refinance. I showed you guys a bit about that. The $5 million in business funding examples and avoiding getting declined. Now, let me see if I can get into that. I think I have another tab open. 1 second. Yeah. Or you're burping. I had eggs this morning with a pancake. And then today I just had water. No, I have had this tea, and that's what's actually getting to me. So 1 second. Let's move this down. It's just the template that I was using back in another video. But this will be important. 1 second. So getting approved for, let's say, non-collateralized funding, because I spent quite a time on that, and I can spend even more on it, on what you need and what I can help get you. So I've said this before in other videos, so this will look similar, like, I've seen that template before. And yes, so stick with me. Now, you can get approved for 10 to 15%, and in some cases up to 20% of your annual gross sales. On average, it's 10 to 12%. If you're not an average person, perhaps you're doing like 6 figures a month, which really helps. If you're doing less than that, that's fine. It could be more. But we're moving into a market where to get longer terms, you have to have really long or stronger revenue. And in some cases, to get even a 1 to 2 year term loans unsecured, some lenders, or a majority of them now, are looking for you to have 6-figure months in business, not even 6-figure annual gross sales, just 6-figure months. So you can also get approved up to 75% of your lowest month in average monthly revenue if you're doing, in a lot of cases, 5,000 and above and less than 15,000. You can get approved 75% to 200% of your average monthly sales. We also factor in your lowest month if you're doing it above 15,000 a month, sometimes 20,000, or in some programs they'll have you doing 30,000. 75% up to 150%, and a lot of these that you're going to see here are for 15,000 and above. 50 to 150%, 50 to 100%, 40 to 60%. This is more for like lines of credits through online banks, and I know they don't get you higher approval rates. And in a lot of cases, they don't get you the most that you want. So you have to look at an alternative to other private lenders and private means. And then you have 20% to 25%. This is for self-employed, 1099, independent contractor, gig workers like Uber drivers, Lyft, grocery delivery. Even there's contractors, trucking businesses, 1099. Okay, so that's that. Term loans, 1 to 2 years or up to 10 years. 1 to 3% interest per month for unsecured. For secured, it's prime rates plus 2 to 6%. The lines of credits, you have prime rates plus 2 to 8%. So yes, you can fall between 4 to about 12% into a little bit higher, assessing the risk, or below. With the secured line of credit against receivables, there's no set repayment or set payment, You pay up front fees to set up the line of credit, and then you pay the rate when the money is collected, which is normally within the 30 to 90 days because you're on terms. And then you have other products like the merchant cash advances, where they can allow you to get up to $5 million in business funding. There's a hybrid one, more of a fixed repayment instead of a variable, where if your sales go up or down, it's dependent on that, and that's how much you will pay back the merchant, in other words, your lender. And then there's a few examples there. And what your rate would be in this case, 1.19 to 1.49, if you are doing 15,000 and above. If it were below that, it's probably up to 1.69. So you can look at that and say, well, that's 19 to 49% in interest. Or if it was up to 1.69 here, or up to 1.69 your advanced amount, so that would be 69% interest. Plus, then sometimes there's the broker fees, and then there's the lender fee, and then there's the origination fee. Sometimes there's a closing cost. So it can depend per service, per program, and per lender. And so that, let's say 45%, on average, you see about 38% interest with these merchant cash advance, these cash advance products. So 38% plus all of that included, that can drive you up to about 45%, 42%. That's what you're going to be paying in interest over the time that you have. And again, that's not a bad thing when you think about, I'm taking these funds and I'm going to apply them for growth and expansion, and I'm going to be doubling, tripling, quadrupling my profit. So paying back 42% interest, I know it's a higher risk because of my profile. I don't have collateral. It's not, my fundability details aren't where they need to be, but I really need to use these funds. Or I'm going to take the time to improve from a 600 FICO or a 500 to a 700 and above. And then I'm going to get approved for a longer term, lower interests. But in a lot of cases, what it comes down to is your repayment. Can you repay back? Let's say in this example, we're giving you $4,500 per month over 8 months. Can you do that? Is that feasible? And you say, well, yeah, I mean, I'm going to be doubling, tripling my profits this season. I'm going to be getting a gazebo. I'm going to be hiring more staff. I'm going to be making more room inside my restaurant. That's going to actually bring me an extra 15 to 25,000. It's a no-brainer. So if I'm paying back 27,000 on 20,000, and I'm now at 35,000, so 35,000 to 27,000, there's a difference there of about 8,000 or so. So even at 20,000, you can do the numbers there. Now, yeah, this makes sense. And I understand, I've come to terms with what I can get. But if you don't have any leverage, don't think that, hey, you're over leveraged. This is what is realistic in your situation. So I'm going to close up here in a little bit. So let's finish this up. Unsecured term loans, you can see all that there. But the example here of what you could get over 18 months if you had received 150,000 at 23% interest, 184,000 you're paying back, terms 18 months. And you can see that there, daily, what it would look like all the way down to monthly. And then we can break that down even further. Unsecured term loans, I give you examples there. Cash advance hybrids, which I recommend. Total cost of financing, a few more things there that we won't really process. And we're running low on time, but it's not a lot we have to go through. Now let me get into my notes and I'll close up here in just about a minute, or I'll leave it open for questions if anybody has any. Right now is actually the time. If you guys have anything you want to say. Oh, 3 common application mistakes. We don't need this, all right? We don't need this anymore. Those 3 common application mistakes. 1, not dating your app. Make sure you do this before you submit it. At the top, in the middle, and or the bottom is where you'll see it. Another one, not printing and signing. You may have signed it, and you may have signed it in the wrong spot. So print and sign. It's very important you take the time to read it. Don't just assume. Don't just speed through it because, the faster I do this, the faster I can send it and get my funds. No, take the time to actually read it, fill it out for your own good, and then send it back to me or whoever it is we're sending it to. But I see that as a common mistake, leaving out the print and sign and or however much of that. And then third is the social security number. And it's important that we have that so we can verify who you are. Why are we submitting information from someone else if we don't have a social security number? We could not identify that. And then secondly, it's to determine credit as well. We can check that. But it's very important. Those 2, and then there's more reasoning behind it, but it wouldn't affect you. It's not like we're going to take that information and use it against you, cause fraudulent activity. That's not what it is. It's very safe and secure. Now, I think I've covered everything here. Let me see. Markets that are tanking, I went over all that. Right now is your time to do more. Increase your supply. Even if you don't use as much of it, you might want to have some reserved. Credit card stacking program, I spoke about that. Yeah, and that's going to conclude everything. And if anybody has any questions, again, I'm going to leave this open for about another minute. Let me see here. I apologize if it's dark. I live here in Vancouver, Washington. This time of the year, it's not sunny. It's hard to believe in June of 16th that we still get this cold, shady, gloomy weather, and then it rains sporadically. Very bipolar weather. I was grateful that I was in California recently, but when I got there, it looked like we brought Washington over, and it wasn't until like the last 3 or so days is when it started getting sunnier. And our beach trip wasn't really that. It was entertaining. It was nice. It was an amazing time. It would have been better if the sun was out because it was a little windy. You are welcome, Gerardo. Here working on my publishing business in less than 6 months, struggling but working. Yeah, I can sense that you are. And I know that it can be hard. I've been there, done that. And like I said, just put your head down, have the information you need, and then go to work. And then you know what you need to do. You know the process, the steps to get there. Know your steps, know your framework, and execute in each part of that. And then just write it down, put it on an Excel spreadsheet. Understand your core values, your core focuses, where you're moving to, the vision you have for your employees, if you have any, and I'm sure a lot of you do. Understand what you're trying to accomplish and work backwards to get there. No doc for startups. Very difficult. Very, very difficult. No doc for startups. Close to nothing. I would really say there's nothing out there. especially even like grants. I know there's minimal like revenue and all that because you're a complete startup. The lowest, like one of the lowest no doc programs is that credit line hybrid, but you have to have a strong enough credit score, 680 and above, to get approved. And literally, we don't look at much to anything. You just get through it like that. I've gone through it myself, and it works. Good question. Gerardo here, everybody is asking, any predictions at the end of the year on interest rates? We're getting closer, so I know it'll be higher. I think it'll be higher. I don't think we're going to drop until next year. I have that thought. I just see how things are going. And if we get into this impending recession, quote unquote, how long that'll last, it'll be a determinant. It'll be a factor that plays into that. So we either stay in it for long enough or long enough and we don't drop the interest rates, but it's just going to continue, I think, to move up some points. I can't say exactly what it'll be. I've seen the pattern of it going up, like 0.25 to about 0.275 or 0.75, but it's hard to predict, at least now, until we get into the recession. I don't want to say that. Like I'm speaking it to, Michael, you're speaking it into, don't say it. No, I didn't mean to say that. Like if we get into this side, it'll be easier to see what would happen. And it's easier to make a conclusion based off of that. It's like anything else that I've made a prediction on. Like when we got into COVID, I was going to start seeing this. When these bills starting to get passed, why they were getting passed during that time, because businesses were really struggling. And then a lot of changes, Federal Reserve, everything started happening. And so I just see it just moving. And then perhaps next year, dropping. Good question, Kevin. He is asking, in your opinion, how many small businesses have established business credit lines? I'd like to give you an exact number, so I'm not like just speaking out of my bum and saying, oh, throwing up a number of 1 million, 2 million. But yeah, it's in the millions and above. So like any other type of like program, excuse me there, you see people getting funded with working capital. And there's different business credit lines. Are you referring to like private lending, business credit lines, credit line hybrids to credit card stacking? There could be a differentiation in who gets approved when you go through the banks, HELOC credit lines. I think the HELOCs are a lot higher because it's, I don't want to use the word easier, but it is. Like if you're an owner of your home, you can get quick access, then that's the way to go. It's credit line. And so that's where people turn to, is those personal loans where you can get approved for a line of credit through one. You can also get a term loan. And so there are more approvals for like personal loans, HELOCs. Not at the banks. I wouldn't say as much because the approvals are like 20% or so. And the approvals should be a little bit higher because we're kind of past COVID in a way, not 100%, but those numbers were staggering. So I just know that it's in above the 1 million range. I don't check up on that all the time. And I could always look at it though and see what the case is. So let's see. I'll give it another good minute. I'm at the bottom of my tea. I think it's called ginseng tea. It's that yellow one, Asian tea. Really good. My favorite. You'll be my best friend if you buy me that. Right now I don't drink it every day. I used to. I'm drinking like vegetable juice for my system. But when I get my hands on this tea and I drink it, quality at its finest. And then you put, like, I may be going overboard for some of you, but I put honey in it and then I'll mix it, right? You have to. There's times where I haven't mixed it and I came to sit down here and I started drinking this and my eyes just lit up. My like mouth just like cringed because I hadn't mixed it and it just tasted like water. sugar water. So always make sure you're mixing and you're putting your tea bags in there, however you're filling up your cup. And I got my cup of faith with me today. There was one, oh, I forgot the name. I know, that's a good one. It starts with a C. Crowd2 funding, no. I'd have to look at it again, but I think it's in the grants. I did a review on this not too long ago with like 5 other grants. They're growing. I mean, specifically for Latinx, there's some in there. But in terms of it being open to all different backgrounds with this 10 billion grant loan and equity program, they're accepting of that. So I wouldn't limit myself specifically to just one grant. And I could go through them individually. Maybe I'll make a video someday. I don't know if I want to do it live on that because it's pretty self-explanatory. I showed you guys some examples now today on what you can go do once you find these grants. What are the expectations? You know, the amount of documentation they may request from you may be a lot. They may see your business as a complete startup, and it's not like you established already an identity or an LLC, S Corp, C Corp, however you operate, and you've been non-operational until now. They may help you out a little bit more as opposed to somebody who's a complete startup. So it's all about those two can be competing, but we look at more, especially with grants. Like, who are you? Why should we believe in you? And if there's enough of an impact, there's enough of a reason, and you show us a business plan, because that's what a lot of us will see, and you can demonstrate where you will be, like where do you see yourself in 3 months, and there can be more than one owner. Well, I see myself, and they want to hear numbers. They want to hear more than numbers. They want to hear about customer base and ways that your key performance indicators, key metrics of your business. So revenue isn't always okay. How are your customers satisfied? What do they think when they're doing this? There's so much. It can be a little bit overwhelming. Yeah, you're welcome. And I appreciate you for bringing that up. I do remember that. Just so you guys know, I do take time really to think about what I'm going to say. I don't just talk like some people. You ever run into somebody who just talks just to talk? Sure, we can all fill a gap, but I won't be that person. So when I'm ready, you'll see it, and sometimes you won't hear it. It's like that SpongeBob meme. Have you guys seen it? He goes, I'm out. I don't do that, but usually I give you guys a fair warning when it's time. 30 more seconds, and I will get going this time. Today's leg day, so I have to do a leg workout. Not a lot of weight. And then it's my brother's fiance's birthday, which I haven't said happy birthday yet. But I think they're going to go and eat. They're inviting us to go and eat with them. So we'll see what happens later this afternoon. And here I am putting a lot of energy. So I'm going to probably go work out, take a nap. Yeah. Or take a nap before and then do that. Yeah. Probably scroll around and catch up some of the recent news with the markets, and then transition to a little bit of entertainment on YouTube. Probably rewatch a few things, not get too heavy on that. If I've yet to reach you, I will. Like I said, Fridays and Saturdays are my catch-up days, so I'll do my best to fill out these questionnaires and more email responses. Usually I leave that to the afternoons of every day, so I'll try to get to that too. People will say that I'm sometimes harder to reach. Well, I can't make myself 100% available, and I understand that. You're not asking for me to be 100% available, but I can't always be there. Like on a phone call, I can send an email out every single day, all I do, but just take the time. Oh, one thing. This is what I wanted to do. That's right. Let me see if I can open this. I'm still going on over here, so I apologize. But I'm going to show you guys a quick and easy way to let me move this. Access my help. 1 second. Let's let this load. Okay. So this is the questionnaire I've been speaking about. It'll look like that more or less. Perhaps you've seen this. So let me quickly walk through. I'm just going to fill out some. Let's see. And whenever you put time in business, there's a spot right here. Put years or months. Even identify with Y or an M. Don't just put a number. I can go find more information if you give me your name of your business, but don't do that because then it adds extra work and you're like, well, come on. Yeah, it's not bad, but it's not there. I don't mind looking for it. It takes more time. And then I have all these files I have to go through. And I take considerate amount of time on these. So just think about that. Put yourself in my shoes, please. I put myself in your shoes. Just come into it with that standard. So let's see if this goes through. It might not. Okay. Don't use mine as an example that you can just put whatever notes you want in there and get away, because it will backfire on you because it won't really benefit you at all. You won't get a response back, and even a very measured response. So once you do, then you'll come to this thank you page where you're going to get all these options. So I'll tell you, hey, I've received your email, this and that, and then you can start on this page. Choose your preferred funding type. We have working capital / cash advance, get a lump sum. This is my #1 recommended, and what higher approvals are. 1099 gig worker, self-employed funding, startup loans, completing new business, 0 revenue, 0 time, purchasing an existing business, business lines of credits, and business line of credits to certain amounts, and why either one of them will benefit you more than the one, or one will benefit you more than the other. Accounts receivable financing, equipment financing, asset-based, SBA, bank term loans, real estate. And then there could be more that I'll be updating over time, but these are just some of the big ones that I would be looking at. And I could add here the personal loan that I've been trying to put for some time, but I'll leave that as it is now. And again, there will be more that gets added. And you can start from there. It could take you to a video. It can take you to another page. And you can get started right then and there. So now let me move this over, and that will be everything. So all resources in the description. Make sure to get started. Fill out that questionnaire if you haven't yet. The employee retention tax credit, take advantage of it. All other options will be down below to get started. And if you've got value out of this video, please give it a thumbs up. I would greatly appreciate it if you did. And I appreciate you for supporting this channel that you're always tuning in for. I know you come in from time to time. We're busy. And if you think somebody else will get value out of it, please share it with them. It can be a complete stranger, a friend, or a family member. But you know at the end of the day, you're like, I took care of them. I found this guy, or I've known this guy for some time. I've been following his channel. I've been watching him. I've been listening to him here and there. I thought he was foolish, man. But look, I've been watching him for some time. And what he's saying actually does make sense. Like, I was in a position where I didn't understand, and now I do. And if you haven't subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future videos that we'll be coming out with. That's all for now. Take care. Talk to you all soon.